In this video, Lucid Motors are doing exceptionally well and going to be hiring another 18% of their work. Oh wait, no, sorry, hang on. Oh, my bad. Sorry, correction. Lucid is going to be firing about 1/5 of its workforce. I wonder why they would be doing that. Plus, data overload. An epic new survey of over 15,000 electric vehicle owners shows some very interesting data about battery life, battery degradation, and battery replacement rates, including Tesla versus the so-called competition. Some stunning vehicle registration data out of Europe showing that Tesla has no competition. What a surprise. Some comparisons between government motors, Ford and Tesla, which seem to suggest that one of those companies is not like the others. And Tesla's Berlin factory reaches an epic new milestone. And a quick heads up, if there's any questions you'd like me to answer specifically about Tesla, head over to Patreon. I've just opened submissions for a Tesla-only exclusive Q&A. Submissions won't be open for long, so get your questions in now. If you'd like to submit a question and you're not already a member of Patreon, you can join with the card in the corner or the link in the pinned comment. First up, I'd just like to pass on my condolences to Lucid Motors and bag holders. We're over on the Reuters website. EV startup Lucid to cut about 18% of its workforce. Talk about a haircut. So what are some possible reasons a company would be laying off about 1/5 of its workforce? Let's see here. 1. Turns out they hired too many people. They're inefficient. They're trimming some fat, although that is quite a large amount of fat to be trimming. 2. It's kind of similar to the first point. Maybe they thought they'd need a lot more employees than they do because they're not selling as many vehicles as they thought, because they're not producing as many vehicles as they thought, etc. 3. They're on the verge of bankruptcy. They're panicking, and this is the fastest, most immediate way to massively cut overhead and buy a little bit more runway. Or maybe there's some other reasons that I just can't fathom. Tesla has done similar things multiple times in the past. Not quite 18% of its workforce, but during tough times, got to tighten the screws. Let's read on. Electric vehicle maker Lucid Group said on Tuesday it would lay off about 18% of its workforce, or around 1,300 employees, to cut costs as part of a restructuring plan. The maker of the Air luxury sedan last month forecast 2023 production that fell well short of analyst expectations and reported a major drop in orders during the fourth quarter. Don't worry, it's nothing to see here. It's not like there's a very small market for extremely expensive, high-end, ultra-luxury electric vehicles that a company can barely make in the first place. And to be fair, there have been some serious red flags from Lucid. Pete Rawlinson sweating bullets when asked a couple of years ago, are you sure you can hit 20,000? Pete wouldn't say the number, obvious red flag. I said at the time, there's no way they're even aiming for 20,000. There's going to be a revision to the estimates. Happened twice after that point. They twice decreased their forecast, okay? They're originally aiming for over 20,000 vehicles delivered in 2022. That got slashed to around 10 to 12 and then got slashed again to around 6 to 7. That was a bad sign, but here's a worse sign. Apparently Lucid recently discounting their own vehicles by $7,500. Seriously, why? At this point in the market, at the high end, when people are paying $150,000 for a new vehicle, surely customers are not that price sensitive. Another red flag. The company plans to communicate with all its employees over the next 3 days about the plan. The plan. It's an interesting way of describing their shit canning of about 1/5 of their entire workforce. CEO Peter Rawlinson said in a letter, adding its US workforce will see reductions in nearly every organization and level, including executives. Lucid, which had about 7,200 employees at the end of last year, will incur between $24 million and $30 million in related charges. Brutal. The company expects to substantially complete the restructuring plan by the end of the second quarter. Quote, we are also taking continued steps to manage our costs, red flag, by reviewing all non-critical spending at this time. Yeah, so if we read between the lines here, the reason that a company would be managing their costs is to ensure they don't go bankrupt, or at least to try. And the reason the company would be aggressively doing so, reviewing all non-critical spending, red fucking flag. I mean, Lucid's currently on fire. Turns out they're discovering that production is hard and expensive. Companies in the United States are reining in expenses as they brace for a looming recession amid aggressive interest rate hikes by central banks. That's putting it lightly. Jesus Christ, the Fed lost the fucking plot. I do not know what these idiots are doing. Industry experts say price cuts by industry leader Tesla and the availability of cheaper EV models from traditional automakers have weighed on demand for new vehicles from startups such as Lucid and Rivian Automotive. Last month, Rivian said it would let go of 6% of its workforce in an effort to cut costs. Lucid shares closed down about 7% in regular trading. You know any companies that aren't laying off staff right now? I can think of one. Tesla. Doesn't mean they can't in the future, but while these companies are crying, Tesla's hiring. It's important to be as lean and resourceful and efficient as possible. So I'm not dissing Lucid or Rivian. You got to do what you got to do. But it's interesting right now. These companies are learning that production's hard and expensive and struggling, offering discounts. There's delays, they're missing targets, showing signs of struggling to actually sell vehicles, struggling to make vehicles. Not a good look. And I'm not surprised. Oh, and by the way, same thing's going to happen with legacy automotive manufacturers. Has happened and will continue to happen. They will also be laying off staff in multiple waves in the coming years. you can count on it. And I hate to bring this up, but I have to because I warned people, and the thing that I warned people about is currently taking place. Go fact check me. Solving the money problem. Red flags. Stock price. Valuation. Do those searches. See what I had to say about this company a couple of years ago around peak insanity. Fucking hell, dude. The bell curve is real. Lucid peak closing price. The stock. $55.21 per share back in November 2021. About 18 months ago. The stock is currently down 86.32% from that point. And I still think the risk reward here just does not make sense. Lucid may be successful. They may defy the odds. They may do the near impossible. But I would not be betting on it, and everyone who currently owns Lucid stock is betting on it. In short, I'm not surprised, motherfuckers. But now, dear nerds, it's time for a Tesla data overload. Over on Teslarati, EV battery health concerns appear overblown, according to new data. The stuff that doesn't lie. This data features 15,000 independent electric vehicle owners who've been surveyed, own all sorts of different brands. How many miles on your odometer? How's your range now? We won't run through every single one of these individually, but just wanted to get to the main point. How common is an EV battery replacement? The figure here, 1.5% of batteries being replaced across the board. Doesn't matter on the brand. On average, 1.5% of batteries being replaced outside of the warranty period. Now, to put this in context, the spouse replacement rate is approximately 50%. At a glance, it appears that electric vehicles, doesn't matter who's making them, the batteries tend to last the distance, unlike a typical marriage. And what you'd want to see here is the mass production high volume vehicles have the most reliable batteries. Let's see if this stacks up. I'll orient you guys on the chart in just a moment, but long story short, smaller equals better. Tesla Model Y leading the charge. Yeah, that was really bad. But seriously, actually leading the charge here. The least common battery replacements, Tesla Model Y. Then Model 3. Then the Audi Turd, then the Tesla Model X, then the Chevy Volt, then the Jaguar I-Pace, then the Tesla Model S. And keep in mind, by the way, you would expect high-performance vehicles that get absolutely flogged like a Model S. I mean, what do you do if you own a Model S? The first thing you want to do is get your friends in there and show them what it can do. Troublingly, the Chevy Bolt EUV, more battery replacements than a Model S, and way more than a 3-in-Y. Nissan Leaf, Hyundai Kona, oh my god. More than 1/4 of all batteries being replaced. And the Chevy Bolt electric vehicle, you did it, Mary. You replaced 1/3 of all batteries. Well done. If that alone isn't worth an induction into the Automotive Hall of Fame, I don't know what is. I just wanted to pull up a single example to show you guys what this looks like in action. We're seeing Tesla Model 3 range over time. Again, these are results from 15,000 independent customers who've been surveyed. I don't know the exact number of Model 3 owners, but spoiler alert, most people who own an electric vehicle own a Model 3, so it's probably a large sample size. And we can see the different variations on battery pack size here. One of the most common misconceptions, oh my god, the battery, the range, it's gonna die, don't you understand? What happens when the battery range dies? So we see here, 82 kilowatt hour battery pack here, almost 350 miles of range at purchase. Obviously there's variations here, in case you guys aren't aware. The top and bottom above this hard green line, that's the variation. Some customers, initial starting range about 365 miles. In the worst case, some around 325, but on average, a little under 350. And we can see over the first 50 or so thousand miles, there's a meaningful decline before things really flatline. And this is important. We're looking at reliability over the long term. We want this line to be as flat as possible and to see the least decline. But even after 100,000 miles, a Model 3 driver with an 82 kilowatt hour battery pack who initially, let's call it, had 343 miles of range on average, something like that, ends up with about 325 miles of range, about a 5% degradation. That's it. And I mean, why not? Since we've mentioned marriage more than once, just imagine hypothetically that your spouse gained a comparable amount of mass. They increased their mass about 5%, let's say over the first 10 years of marriage. That'd be a few pounds. We see similar trends for each battery. We see higher levels of battery degradation in the 50 kilowatt hour version of the Model 3, but again, overall, at worst, maybe losing 10% of range before it pretty much flatlines. And again, I just want to go back to this chart. I mean, just look on screen right now. Now, in fairness, the purple bars are official battery recalls, as in, oh, we f***ed up, there's an issue with the battery, I don't know, maybe it will spontaneously combust and barbecue your whole family, that's bad, let's replace those before that happens. But regardless, we can see a very clear trend here. Tesla's mass production, Model 3 and Model Y, clearly, based on battery replacements outside the warranty period, have the most reliable batteries of any vehicles on roads. And it's not even close. Now, more data. Just a quick caveat here. This is data for Spain, Netherlands, Norway, and Sweden. Not all of Europe. These are countries reporting vehicle registrations, essentially sales, on a daily basis. So it's not all of Europe, just those 4 specific countries. Anyone notice a clear leader here in green? Yeah, obviously Tesla. Absolutely slaying it. This list is by brand. Just to be clear, we're not looking at Volkswagen Group, we're looking at Volkswagen, the brand, in yellow. Number 2. Now you might say, well, that's unfair. I mean, shouldn't you be comparing the entire company and all of the sub-brands? Tesla only has the Tesla brand. VW, of course, multiple brands. It's an absolute monster. So let's be fair. Let's have a look at that instead. Same markets, same countries, this time by automotive group. Is there a clear leader? Still Tesla. Imagine that. VW in second place, keeping in mind that VW has trillions of different brands. And this, ladies and gentlemen, is just the beginning. The Berlin factory, still ramping up. Currently, approximately 5,000 vehicles per week, about 250,000 vehicles per year. Well on its way over the long term to producing multiple millions of vehicles per year. Tesla dominating everyone, including European automakers in their own backyard. Embarrassing. Here's a look at Sweden. Again, Tesla in the lead already, and it's still early days. Just look at the shape of this curve from Tesla in green. Everyone else is seeing a fairly linear increase in their vehicle sales. Obviously, right? As the month progresses, more sales. Simple. Tesla is the only company here showing exponential growth. Look at that curve, the uptick here. One of these is not like the others. How about this? We're now looking at electric vehicle sales in Norway, a leading indicator of future markets and future sales. Anyone notice anything standing out? Yeah, that's right. The towering blue line, Tesla, of course. VW Group in second place. But once again, look at the shape here. Now, in fairness to VW, there's a little bit of a growth curve here. It's not completely linear. But look at the difference between VW's little curve versus Tesla in dark blue. Night and day. Tesla looks like it's literally just gone vertical. This looks like the trajectory of a SpaceX launch. And again, this is before the Berlin factory has ramped up to meaningful volumes. I'm adamant that the Berlin factory over the long term will be producing millions of vehicles per year. Don't say I didn't warn you. And how about a quick moment of appreciation for the team at Giga Berlin? 5,000 vehicles per week now, annualized rate just over 250,000 vehicles per year. And this has taken place just 1 year after first deliveries took place to customers. If you want to do some homework, compare this ramp to say Lucid or Rivian or Ford, or pick your automotive manufacturer making electric vehicles. I challenge you to find another automotive manufacturer whose ramp production, where first deliveries took place and a year later, they've scaled to 250,000 vehicles per year at an annualized rate. I'm just kidding, you won't find one unless you're looking at Tesla. Just for the hell of it, let's watch this quick clip. It's less than 30 seconds long. Round of applause to the Giga Berlin team. More data, anyone? This, of course, from the man, the myth, the legend, James Stevenson. Shout out to James and Loki. What we're looking at here is long-term debt in billions of dollars. Why does debt make me think about some things that are happening right now? Debt. What does debt involve? Oh, you have to pay interest on debt, don't you? Interest. Why is that? Oh, interest rates. Oh, interest rates have gone up a lot. Something, ticking time bomb. Let's ignore the collapsing value of many of the assets secured against this debt. Let's not go there. Anyway, the point that I'm getting at here, the less debt you're carrying over the long term as a company, generally speaking, the better. Now, don't get me wrong, debt is a very useful tool, but at some point, it must be repaid. Notice Tesla, effectively no debt, raised a little bit of capital, peak debt 2019, and Tesla's been paying down their debt. They basically now have almost no long-term debt. This is a fascinating chart, by the way, and thanks massively to James for putting this together. Anyone notice any trends here? GM's debt looks like Tesla's sales over the long term. What the f***'s going on here? Since Tesla IPO'd, GM's long-term debt has increased from approximately 10 billion to about 75 billion. You did it, Mary. Though in fairness, I think Mary was on board as CEO around 2014, so she's only responsible for about 40-something billion dollars of that. Anyway, Ford over $100 billion when Tesla IPO'd, now around $90 billion. So at least they've paid down some debt overall. But again, ticking time bomb here. Which of these companies do you think, just all other things being equal, is in the best financial situation? If this was the only metric you're paying attention to, of course it's not. We also have to look at things like quarterly profit and blah, blah, blah. But let's not go there. Pretty clear. I mean, seriously. Tesla is an excellent example of how to use debt effectively. I've done this myself. There are some people who have an allergic reaction to debt, usually, in fact, almost exclusively due to the fact that someone they know personally got wiped out, either a friend, close family member, etc., because they took on too much debt, didn't manage their risk, and got absolutely f***ing slaughtered. Or people who have an extremely anxious, worrisome personality that always think about the worst case, they just can't sleep at night, even if they have a single dollar of debt. Having an aversion to debt, unless it's going to prevent you sleeping at night, which you probably need to figure out why and do some therapy or whatever, work through those issues, it's crazy to me. Debt, when used well, like in the case of Tesla, can be an extremely effective way to grow value if managed responsibly. As we can see, Tesla loaded up on debt from 2010 to 2019 over a 10-year period. Their long-term debt went from almost nothing to about $10 billion. Now they're printing money. Why are they printing money? Because of the debt. They use that debt to grow their business, to scale up their revenues and their profitability. Crazy idea, but you can actually use debt to improve your financial situation. Now that Tesla's done that, they're a money printer. They've been able to pay that debt down. I have a similar plan with real estate. I'm currently carrying over $2 million of debt, investment debt. And I've used that to accumulate substantially more than $2 million of real estate, which is also spitting off a reasonable income stream. Similar story, just a lot less numbers. What you don't want to see is a company that's been around a long time, like Ford, failing to meaningfully pay down their debt over the last 2 decades. And GM, of course, Government Motors, after getting bailed out by US taxpayers, has just been loading up and loading up and loading up. Oh, and that's before they have to borrow a shitload more money to transition to EVs. How does this end? I'm not going to spoil the movie for you guys. Maybe you can figure it out yourself. Paints quite an interesting story. We're now looking at revenue in billions of dollars. Ford, GM, and Tesla. As we can see, over the last 22 years, Ford and GM going absolutely nowhere, which is actually really bad because there's been plenty of inflation over the last 20 years. This stuff should at least be tracking inflation, but Ford and GM going absolutely nowhere. Tesla, on the other hand, from almost no revenue to almost Ford and GM levels of revenue in a 20-year period. Just look at this chart and let the implications sink in. We know a picture's worth 1,000 words. A chart is worth a novel. One of these companies is not like the others. Any guesses which? What do you think the next 22 years look like? Something to consider. And how about this? Adjusted automotive free cash flow. You would expect a company like Tesla, in startup mode, negative cash flow on their automotive sales for a period of time. To be expected. You would then expect, if they know what the they're doing, that they'd reach positive cash flow on their automotive sales, which Tesla has, comparable levels to Ford and GM. Ford and GM have been around a very long time, Tesla not so much. What's going on here? One of these is not like the others. I'll let you figure out which. And lastly, GAAP earnings per share. Crazy, I know, but anyone notice one of these companies is not like the others? Oh, by the way, I just have to point out, there's a reason I started this YouTube channel in late 2019. Look on the chart at late 2019. The reason I started the channel then was to go, hey guys, do you have any idea what's about to fucking happen? Next minute, that happened. This single chart explains why. When I ever hear anybody compare Tesla to an automotive company, compare Tesla's multiple to an automotive company, think that Tesla's just an automotive company, say they're just a car company, or even worse, say they have nothing that other companies don't have in terms of technology, etc. I realize I'm talking to somebody who's suffering from and manifesting brain damage. Look at the trend. Here's a fun exercise. Just imagine what the next 22 years will look like on this chart. So, did we learn anything today? Well, battery degradation isn't really a thing. Worst case, maybe you're going to lose about 10% of the range on your vehicle, which ain't that much. Think about it. Let's say you got a vehicle with 350 miles of range. You lose 35 miles of range over the first 100,000 miles of ownership, and then barely any negligible decline from there. Big nothing burger. The best case scenario, you're looking at closer to 5% degradation with 100,000 miles driven. A 300 mile range vehicle might lose 15 miles of range over 100,000 miles of ownership, and after that, barely any degradation. So I think we can finally put to bed the myth batteries need replacing in electric vehicles after a few years, the range declines dramatically. Not the case. What else did we learn today? Well, it turns out that Tesla is not like a traditional legacy automotive manufacturer, and it also appears that Ford and General Motors are kind of f***ed. And we also learned that production is, how's that go again? I always forget. Production is something. Anyway, Lucid are learning something about production. Oh, that's right. It's very easy. Nothing could possibly go wrong, and that's why they're hiring aggressively. Oh, wait, I forgot. Yeah, I don't know why Lucid's laying off nearly 1/5 of their workforce. Anyone have any ideas? Let me know in the comments below. It's not a red flag, is it? It's not like they're struggling, are they? Nah, everything's going to be fine. If only I were feeling and performing my best, I'd have enough energy and the will to actually think about this issue, and maybe I could draw a few conclusions. But unfortunately, because I don't take Athletic Greens AG1 every day, I don't have enough energy or cognitive power. I'm too tired, too lethargic, I can't be bothered, so I'm sure everything's going to be fine. In all seriousness though, you guys have got to try Athletic Greens AG1. It's an excellent way to fill in nutritional gaps, which everybody has. 75 high quality vitamins, minerals, and whole food source nutrients. It has prebiotics and probiotics, digestive enzymes, and adaptogens to help you cope with stress. Such a simple habit, 1 scoop once a day, every day. It's that simple. Athletic Greens AG1 will have you feeling and performing your best. And if it doesn't, there's a 90-day money-back guarantee. So what's the worst that can happen? Plus, if you use the link at the pinned comment or head to athleticgreens.com/SMR, get yourself a 1-year free supply of vitamin D3 and K2. Here are what some viewers of the channel have to say about their experience with AG1. Day 30 of AG1, and I cannot explain to you how much better I'm feeling. My social anxiety is so much better. I did not expect to help so much, but it has. I feel energized, ready to do things. I've been staying on top of things for the first time in years. If you haven't tried it already, truly try it. I was a skeptic. I did not at all believe it was going to help, and it has, significantly. AG1 is totally amazing. No more ibuprofen, no more leg cramps, much less back pain, feeling better and more energy. This is great, and I'm only 2 weeks into AG1. It really works. Thanks, Stephen. You're welcome. I noticed 3 things with AG1. My chronic heartburn is gone. My digestion is more regular. I have more alertness, and I wake up with a raging heart on every morning. I hope you're putting it to good use, my friend. Just received my second pouch of AG1 and find improvement in short-term memory and not napping during the day as I did pre-AG1. Worth the price. Regarding AG1, okay, so I couldn't ignore all the talk. It's been about 3 months now and I've literally stopped drinking coffee because of it. Not even intentionally, I just don't need it now. Strange. Not that strange, AG1 will meaningfully boost energy, at least in my own experience. That's the biggest benefit I noticed almost immediately. So what are you waiting for? Head to athleticgreens.com/SMR or use the link in the pinned comment. Start your daily health habit now and let me know how you're feeling in a few weeks. If for some strange reason you don't get the results you're expecting, there's a 90-day money-back guarantee, so what do you got to lose? Oh, that's right. Nothing. And don't forget, Tesla-only exclusive Q&A happening on Patreon very soon. Submit your questions now. Submissions won't be open for much longer. If you're not already a member, you can join with the card in the corner or the link at the pinned comment, and I'll see you over on Patreon. Love ya.